Hey everybody, this is Brett with a quick market update. Just took some time off, and of course, whenever going away, the markets are going to go crazy. That is rule number one in crypto. A couple things to unpack. We'll come back to this article. The big question mark is what's going on with Bitcoin. We have Bitcoin pushing up over 64K recently, and over the weekend, right up to 64K rather. So I'm going to unpack this a little bit. We have been projecting a sell-off up in this range, and we can see that with some sell order pressure here in this red box there. So we'll come back to that. But in terms of where things are, really are overdue for a pullback. We'll look at some other charts here in a moment, but some sell pressure is definitely upon us, both with the sell pressure up around 65K that I talked about. This is just in here. The government just moved 922 million of seized Bitcoin after Bitcoin broke 60,000. Is this anything to worry about? And the short answer is I don't think so. This is going to line up on the OTC market, so it's not going to be priced in the overall scheme of things. It might dampen some of the buy pressure from the ETFs, however, because when the ETFs were announced, that's why a lot of the sell pressure happened. GBTC was selling a lot of their Bitcoin in redemptions, and also, of course, FTX selling $1 billion of its Bitcoin that was found and recovered. So similarly, what that means is that I think the ETFs will continue to buy, but they're going to be buying mostly through this inventory. And certainly long term, the signals are very bullish, but we are overdue for pullback. So we're going to look at that here today. How far will we pull back and how high we could go from there. So I'm not going to unpack this article too much. That is the biggest thing that I wanted to mention to you, that, seized Bitcoin as being moved and likely to be sold, and but it won't affect prices too much because of that OTC market pricing. And we've talked about that in previous classes, but just think of it as like bearer shares. In the old days, stock certificates, if you held the certificates, the stock papers, then you own the stock. There was not an efficient exchange. Therefore, you could sell it for whatever you wanted to and wouldn't affect any of the prices on the centralized exchanges. So let's take a look at a couple other things here. I'm just going to jump around. Liquidations were super high here in the last 48 hours on Wednesday. Currently, it's showing over a 160 million on the short, 150 million on the long. But I'm going to pull up a price image here from just the other day, where we had 790 million liquidations in a 24-hour period. So that was pretty even, although the shorts 438 million and the longs 352 million of the liquidations. And that's the market makers playing market maker games. That's what they do at these key inflection points, and just indicating uncertainty. On the fear and greed index, things are considerably toward the greed side, and we should see some pullback. I did want to talk a little bit about a sector that you guys should keep an eye on. That is, we've been talking about for over a month here in our Retire Rich program, but it is called Decentralized Physical Infrastructure, or Deepin. And rather than go into a lot of the actual projects in here, I'm not here to shill anything, but definitely want to keep an eye on that. And coins like Filecoin, which just to give examples of what Deepin is, in a decentralized physical infrastructure network, it essentially is bridging the gap between tangible infrastructure assets and blockchain. So in the case of Filecoin, it's competing against Amazon's most profitable sector or business entity, which is AWS. So in terms of having a decentralized version of that, a lot of the AI projects, another hot sector in crypto, the AI sector, which went up 100% earlier in 2023 and has been surging since around October of 2023 into today. But basically, Deepin, physical assets where you can use things like network routers. There's even a sector where they're using decentralized GPUs, and also in terms of phone network and peer-to-peer network. So Helium Coin's another great project along those lines. Love Helium. That's going to be a huge mover, I think, in the future. And other AI-based ones like Render. So we're not here to go into individual coins. Just wanted to put those sectors on your radar. And you can see a little bit more about what it is here. Again, I'm not going to get into these. Always be careful with news articles, though. Sometimes they'll throw in some legit projects, and then they'll throw in some of the lesser known ones that maybe they're being paid to shill or they are promoting. So I'm not going to talk about those here, like eTuck. I'm not familiar with this. But I would highly recommend learning about Deepin. And essentially, it is decentralized physical infrastructure networking, or Deepin. It's set to be one of the hottest sectors in the crypto market in this current bull run. As we know, Every bull run has its own narrative. There was DeFi summer, and then there was a number of other sectors that ran in the last bull market across the board. And so, no need to look at the past, but the narratives this cycle, again, I think will be Deepin and Metaverse and some of these other sectors that have been heating up. AI certainly is one of them. Deepin aims to bridge the gap between blockchain technology and real-world applications, creating new paths for the Internet of Things. This is something Helium is dominating, or is a key figure, a key project, rather, in the Internet of Things. I can't say dominating, but it is a fast-growing project. I do have my Helium miner over in the corner mining away, and they've recently launched a mobile network similar to what Mint Mobile did, and that recently sold for $1 billion. So the point of this is I would focus on, and we like to focus on, projects that have a monetization model. Either they're venture-backed or they have a real good utility and use case that can earn money. Companies that earn profits tend to stick around longer. And Deepin is still relatively new, but there are already dozens of exciting projects with huge growth potential. So just wanted to put that on your radar. Also wanted to share this with you. Very interesting. The volume on the IBIT, BlackRock's ETF iShares here has had more trading volume than the QQQs on Wednesday. So this is absolutely huge. You can see this spike greater than the entire volume of the QQQs on the NASDAQ, BlackRock's IBIT ETF. So let's jump over to that and take a look at the ETF, because I've been tracking that right here. And so I'll pull up a study I did on TradingView, just kind of showing that we've been watching this since the breakout around $25. But you can see this massive push. These green blocks are one of our new custom indicators that shows buying volume. So when we see one of these, it tends to push price higher. And here is that study on TradingView, where if we were watching this breakout above $25, sure enough, we started to see this gap up, massive volume coming in. So if I hit play here, we've seen this really expand, and even here recently this week pushing much higher. Let me jump over to another page I want to show you that talks about, here it is, the ETF Tracker. So the Bitcoin ETF Tracker showing the larger volumes coming in on, of course, Grayscale, BlackRock, Fidelity. Grayscale has been around a long time. They have 23 billion assets under management. We saw a lot of that flowing out because the shorter term holders were looking to basically move out of the higher fee conversion. GBTC's ETF's going to have 1.5% fees, and of course the other ones like BlackRock and Fidelity much lower. So we saw that outflow. So we're not really going to focus on that. I do want to focus on the 24-hour volume. And actually, let's look at the assets under management. BlackRock and Fidelity, almost $10 billion. So we're seeing that flowing into the markets. Here's what I wanted to talk to you about, because BlackRock originally said they'd have $10 trillion to move into the markets potentially. And so if $10 billion assets under management under the BlackRock and Fidelity ETFs, of course there's ARKs and Van Eck and the other ones, but they're really much smaller. So focusing on this $10 billion of assets under management they've been deploying, if that can move Bitcoin 20%, we went from 50,000 to 60,000. Imagine what $10 trillion could do. It could 10x the current price of Bitcoin. Now, I'm not saying we go to $600,000 Bitcoin this cycle. I don't think we do, but in the next few years, certainly possible. We're going to look at some shorter term targets here in a minute, but I just wanted to cover some of these things here that we've just gone over. And of course, if you'd like to learn more about what we do here and these more in-depth trainings and market updates, you can find out more about that at moonstream.io/max success. I do a live weekly class on Wednesdays. Unpack this a bit deeper, and you can learn more about that as far as what we are doing and live access to me on a daily basis. So just wanted to give you guys that update. And in case any of you want a deep dive into this, I'm here today to give you the higher level targets on Bitcoin. Again, heavy selling pressure here between 66,000 and 69,000. Seeing some news coming in, and I don't need to unpack that right now. But I do want to talk about this blow off sort of top here. This movement, rather, that is unexpected. showing that this time really may be different. I like to draw trend channels and keep my TA simple, and so when these trend channels form, they're really accurate in containing the tops and bottoms, and I always love catching a new trend channel early on. So previously though, the trend channel would have capped us off here around 52,000. This move higher and this pump up to 64,000 yesterday is unnatural, and it shows that this time truly is different. Now, I do think we're going to sell off from here. I think we have a pullback and some correction, and at this old high. Incidentally, on this weekly time frame, we can see that the old highs on a weekly time frame, we're right at the 65 level, 65,000. We did push up to around 69,000, 68,000 on an interim time frame, but I'm looking at a weekly candle. And so yesterday we pushed right up into this range, and this week. So could we push above 65K? Could we push up to 68, 69K? I believe we could on a short-term basis, but I also believe March is going to be a down month, a down candle, and I'll show you why. But keeping this in mind, we've broken above this trend channel, and what also I'm noticing, it's pushing the upper boundary of the Bollinger Band, and of course I use a little different Bollinger Band for crypto, using a third standard deviation. Really contains price action much better, as we saw in the bull run back here in 2020 and 2021. So if we're touching that upper boundary or getting above it, any spike above this, above 65K, I believe we will see sell pressure and coming back down and some kind of a dip. Now, do we come back to 34, 32K like I was originally predicting? I don't think so at this point. I think more than likely we come down around 45K and in the midline of the trend channel, and that sets us up to rally much higher. So let's take a look at a couple things here. Also want to look at the halving and the DXY. So let's jump to the DXY first, and then we'll look at the halving schedule. So we've been watching this here for some time. On the DXY, pushed up to 105, pulled back in here, had a question mark. Would it hold the 104 level? And of course, it broke down as Bitcoin pushed higher. But we are seeing the DXY pushing up higher now, which also indicates some sell pressure in the Bitcoin price. Okay, so if you see the DXY above 104, 105 on a closing time frame, then that's going to coincide with a dip in Bitcoin. And let's say it pushes up right around this 105 level, which we did see some previous support and resistance, or resistance here in this level. And so keep an eye on that. I said support and resistance because if we drew a trend line, I'll just drag this one down for now. We saw it previously was support, acted as resistance in here. So I do think the DXY bounces a bit, could break higher, and then we see the bigger Bitcoin rally as the DXY falls down lower. So let's look at the halving cycle here, or the halving chart. So this is a lot to look at. It's not the best visualization, but these are free indicators on TradingView. So typically what we see is the halving happens, price is relatively stagnant, and even we can see up to a 50% price pullback after the halving, and before it rises higher, and even going into the halving. We've seen that in the prior cycles. But what I want to point out here is even in the last cycle, it was sideways, dipped down, then we had the halving, and then we saw price appreciation with the maximum price right in the middle of this parabola. So the next halving is right here in the end of April. However, I do believe, and some people, I was in the minority when I first started saying I believe we see a left translated cycle, and I still believe that. We'll look at one more chart that I want to put on your radar, and we've been following. But price is starting to move higher here. If I move this is just a copy of the last one. And at the peak of the halving, or if price starts to really appreciate after the halving, it would be over in this range. Okay, we're starting to see price appreciation ahead of this halving. Let me just turn off, I don't need to turn off, but this blue mark here is where the halving would be. So with that in mind, we are seeing price push higher now, further evidence of the left translated cycle, and that would put our market peak right in here around, well, I don't, it's hard to say, you guys. I don't think we peak in necessarily, this would show us we peak in April of 2025. I'm going to show you my price targets here, where I think we do push past the last high, and we shoot up to 100,000 pretty quickly, and faster than most people realize, without the big pullback. And then I think we pull back strongly to retest the prior cycle high, and then before pushing up higher to, I think, 155,000 on Bitcoin in this year of 2024. And then I think we go to 210,000 in 2025. So a couple of reasons here. I don't want to go into too much detail, but these are 10 factors that could ignite this market. We've already seen, number one, the BlackRock Fidelity ETFs pouring money into this market. Watched an interesting interview with Cathie Wood and her partner who's running their ETF, talking about the fact that the crypto market hasn't seen the kind of money that can come in when an ETF gets approved. We're talking trillions of dollars, talking 3 zeros, everybody. So to see 500,000 Bitcoin in the coming years is not unreasonable. And we can see that. But right now, I'm focusing on this next phase. So you can read these 10 factors here. Of course, we have the Bank Term Funding Program ending soon, likely to trigger some bank failures going into March. And I'll still show you that chart where I think the reason why March is likely to be a down month. We also have QE money printing. We've got to start paying down our debt, everybody. And as high as the interest rates are, that's really not possible without getting that money printer going again. China's already doing it. And the global markets are going to need to start quantitative easing sooner than later, if for no other reason to pay down and afford this rapidly escalating debt. If you want to have a scary view of a page, go to usdebtclock.org, and it just shows how fast the debt is accumulating. Also, how many taxes each of us owe as American taxpayers. If you're not in the U.S., don't need to worry about that. But we're also seeing, these other smoldering campfires, de-dollarization of the dollar, the BRICS nations buying and using dollars less. It's not in the news, but it's still growing. Keep that in mind. We've got corporate accumulation, MicroStrategy buying more Bitcoin, as Michael Saylor has committed to do. MicroStrategy now a surrogate for Bitcoin and surging with recent prices increasing on Bitcoin. And we'll also likely see, I think we'll see that there are more corporations buying Bitcoin. They're going to start seeing that, or we'll see that on the Q1s and the 10Ks rather, when they come out quarterly, that they're already doing that. And we also have, now that El Salvador is saying they're up 44% on their Bitcoin purchases once they converted to Bitcoin as a national reserve currency, we're going to start seeing more countries jumping on board like musical chairs. So more country adoption as reserve currency, more corporate accumulation, all going to increase the demand. And as we know, the halving is going to cut supply in half. So we're going to have ETFs and other countries and the whales, and we're going to see the retail FOMO coming into this market with less Bitcoin available on a percentage basis than we've seen in a long time, if not ever. So keep in mind that all of these could ignite all the rest of these into a good old-fashioned forest fire and explode this market at any point. So bear with me here, because I want to show you this pattern here, which is lining up perfectly to the last halving, the last cycle rather, just stretched out a little bit further. Also, political support in favor of Bitcoin and crypto. We're seeing more of that. We're also seeing more pressure on some of the anti-Bitcoiners like Liz Warren and the Bitcoin whales and super PACs, really targeting to educate people. Not targeting her, but sort of educating that, hey, this is a good thing, and is not going away and can be good for the economy. Cynthia Loomis, of course, has been famously or infamously burning the methane from oil refinery and natural gas to power Bitcoin mining. So the argument that it's bad for the environment is no longer valid as more and more companies or more countries start to do that. And of course, we have the bursting of the global sovereign fiat debt bubble. Still hasn't happened yet. We pumped $35 trillion into the global markets after COVID. That has not filtered out completely yet. So all of these factors in rapidly rising Bitcoin prices. Here is this the bars pattern here projecting how I see us getting to 155K. So this here is just an overlay of the prior cycle when we were in the bull run, how fast this can rise. And so we took this exact bars pattern, stretched it out a little bit, and that shows me we could blow right through the old high at 70,000. I think we get a brief pullback, maybe 10%, and then we push up higher straight to 100,000, in which we've seen in the past. That would be this 1.618 Fibonacci extension. When I say what we've seen in the past, these Fibonacci extensions tend to be very prophetic at times. Not that we have seen Bitcoin 100,000 yet, as we all were expecting in the last cycle. But after that, I think we could pull back here to the old cycle high as to retest previous resistance as support, and that would be that 30% pullback that we've seen in Bitcoin time and time again. And from there, we bounce hard. We push up right up in this area, and I do believe we'll see $155,000 Bitcoin this year, and the 3.618 projection which is that same Fibonacci extension we drew in the last cycle, which correctly called the exact top here right around 65K, 68K. That was incidentally also the exact point where the total market cap hit 3 trillion. So I'll talk a little bit about that, where we are now. We are also kind of at a resistance level on the total market cap. So yeah, I do expect we see some kind of a pullback here. I just don't think it's going to be as deep as everyone's hoping for or last as long. And so the bounce from here, if we get to 155, that push to 210 in 2025. Again, if we go back to that halving chart, I would say that's around April of 2025. I think it comes earlier. Typically, the market peak comes around end of the year after the halving. So November, December, I think it does come early. This is a screenshot over here. So I am just sort of showing what it could look like if we see this left translated cycle. So with that in mind, let me show you two things. I want to show you the monthly chart of Bitcoin, and let's jump over to that. Actually, I did have it pulled up here. Right here, you guys. Okay, so what this shows, look at this giant green candle. For one, we have seen those in the past, but not since back here in the beginning of the bull run. But the reason I think that we could see a pullback in March is we've had 6 candles. We've had 6 candles on a monthly basis. Very rare. We only saw that on this bull run. And then in the prior cycles, we've seen pullbacks along the way, although minor. If we go back to the 2017 bull run, we had 1, 2, 3, 4, 5, 6 green candles on the monthly time frame, and then we had a red candle which pulled back. It did pull back to this level and then bounced, and then we continued the bull run. So that is what I am expecting here as well. As far as the total market cap, let me jump over to that quickly and show you why we've been watching this and why we should pay attention. A lot of sell pressure up in these levels, and I had drawn this path to $2 trillion market cap weeks ago. Of course, it's happened much faster. Part of this is a short squeeze. Liquidating those shorts, $300 and $400 million in short liquidations certainly contributed, as well as the ETF money pouring into this market. These round numbers typically very important for Bitcoin. Again, that $3 trillion market top, that was the exact top of the last cycle. And of course, we had the 1 trillion level that we struggled with all the way back in here as support, resistance, and support finally broke up. For some reason, the 2 trillion is not as sticky. It's more like this 2 trillion level where we have pushed right above this, but on a monthly time frame we haven't yet, so that could still sell off. If I move this up here, of course, 2 trillion, right around $2 trillion was this strong resistance back here. We did blow through it, but on a weekly time frame, the week hasn't closed yet, so this could certainly sell off back to this 2.2 trillion level. Another reason why I think we could pull back here and down in this range, potentially around 1.8 trillion, and then really shoot higher. Guys, we've got to have a bounce. It's like jumping off the roof onto the trampoline. We need the jump off and land on the trampoline to really push us higher into the higher levels that we were expecting. How high could we go on the market cap? Guys, I've heard projections as high as 9 trillion. I don't think so. I think 6 trillion certainly is possible on this total market cap in the next cycle. So if we wanted to just draw this, I'll just borrow this trend line here and move it back later. But to project that out, 6 trillion certainly in the cards if we look at sort of this macro trend channel heading higher. So we'll have to see. First things first, we'll have to keep an eye on where we are in this. But I will say this, on this next pullback, whatever it is, be ready to deploy capital, not financial advice. And by the way, if you like these videos, please make sure to hit the like button. Helps the algorithm so we can do more of these, and also subscribe to the channel. And again, if you'd like to see more of what we do here and what I do on a weekly basis in our live classes, you can find out more at moonstream.io/maxsuccess, only for those of you that would like a little bit more in-depth training on these things. And let's see, I think that's about all I had to share with you as far as the other leaders in the market. Ethereum also looking good. The next narrative, likely the ETF. The ETH ETF, will it get approved in the spring? Potentially, but we see people positioning. We see traders positioning ahead of that, pushing up toward 3,400. Some strong sell pressure up here on 4,500, but at the old high there. But I think that any push, we're going to break 5,000 this cycle, if not 10,000. Could ETH go to 15,000? Certainly possible, everybody. We've seen what happened with Bitcoin. If ETH gets an ETF approved, it is going to be off to the races. Also looking good. Cardano looking pretty good here, trying to break above this 66 cent range. Sell pressure, not it could easily double here. Not a lot of sell pressure on the weekly time frame up into the $1.50 level. And also, we'll take a quick look at Solana, because Solana looking very strong here. I like Solana. The chart kind of breaking up into this range. It took a little breather, consolidated. It doesn't look like much, but that's quite a long consolidation. Solana, we've been trading this since August of 2021, caught that nice run up. And of course, recently we were talking about it here back in October, up 525% since October. So some consolidation is warranted, breaking up here in a big macro cup and handle pattern. And it's not price discovery because we have all these buyers back in this range, but Solana is such a strong project that certainly I think this will continue higher. I'll be waiting for a weekly close above the 125 level to confirm, ideally a daily close. If it pulls back, though, certainly a buy in these ranges, in my opinion, down around 115, riding the 21 and 50-day exponential moving averages. Some good old-fashioned TA there for you. And our custom indicators also showing a fresh bell, which usually is our buy signal on our trend indicator. And our other signals are green as well on our signal and TSI. So Sol looking very good here. I definitely wouldn't discount that. Other tier ones looking good. Link and Comp also had a nice little burst here in the last day or so. So if I jump over to that and pull that up here, I think I have that. There is Compound. But it's kind of slow mover. It's breaking into a relative high. I'd like to see it pull back, retest this level as support, and then I think these do go much higher. Seeing a lot of activity also in the AI coins and the Deepin coins like Filecoin, which I mentioned. This is a strong project that we really like. I know Arthur Hayes really likes this as well, so keep an eye on that. Great little breakout here to retest, breaking out of this trend resistance, this upward descending trend line. So this is typically the pattern you'll see: break above resistance, come back and retest. So it's bouncing off of that now and looking pretty good there on Filecoin. So anyway, everybody, that's all I have time for here this week. Look forward to doing more of these, and exciting times. The bull is back, everybody. We're certainly moving into phase 2. The big question is, do we get a pullback? How big? When is the time to buy the dip? Well, I'll keep you posted, so stay tuned, and we'll be doing more of these. So anyway, again, thanks so much, and I'll see you soon. Cheers, everybody.